Good morning and welcome to our global headquarters here in New York. I'm Menace Cranny. You're welcome to Bloomberg Brief. Let's set that agenda. Signaling a pause, the Fed Chair Powell calls the economy strong and sees no reason to hurry rate cuts as his colleagues remain cautious. I haven't had a boss in 25 years. A clear response from Jamie Dimon on President-elect Trump ruling out the JP Morgan CEO for his second administration as Treasury Secretary. Another controversial pick. Robert F. Kennedy Jr. is picked as Health Secretary, and John Thune says all options are on the table to get Trump's nominees cleared. Good morning. The art of the pause is on display in the bond market. I can tell you that. Yesterday we saw the very short end of this curve ramp higher by 8 basis points at one junction. We give a little bit back this morning. The December rate cut bets have been shredded from an 80% probability to barely over 50. And the line was this, the killer line was this. This is the art of the pause, or two-way optionality, I should say. The economy is not signaling the need for the Fed to hurry rate cuts. And with that in mind, up went the yields across the curve. Let's roll it over, because we're going to hear from Collins, Goolsbee and Barkin today. So there's a little bit more Fed speak. Have a look at these equity markets. They're grappling with what a pause might mean for equities. Lots of people saying it doesn't matter about the rates. The growth is the most important narrative. In terms of the 13F filings, big is still very beautiful. The biggest weighting is in tech at 21%, followed by financials, 15%. And we've just seen the Bank of America flow telling us $55.8 billion went into U.S. stocks through November 13th. And it was a record for large cap stocks with $44 billion piling in. It is about the art of the pause, or two-way optionality. Fed Chair Powell spoke about his expectations for inflation and the path forward.
With labor market conditions in rough balance and inflation expectations well anchored, I expect inflation to continue to come down toward our 2% objective, albeit on a sometimes bumpy path. We're confident that with an appropriate recalibration of our policy stance, strength in the economy and the labor market can be maintained, with inflation moving sustainably down to 2%. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks to both sides. The economy is not sending any signals that we need to be in a hurry to lower rates. The strength we're currently seeing in the economy gives us the ability to approach our decisions carefully. Ultimately, the path of the policy rate will depend on how the incoming data and the economic outlook evolve.
Joining me now, Max Kettner, Chief Multi-Asset Strategist over at HSBC. The economy is not signaling the need for the Fed to hurry rate cuts. Is that the art of the pause, or just regaining optionality for December? Max, good morning.
Good morning, Manus. Thanks for having me. Look, I think it is more regaining the optionality, because perhaps last week he's been a bit too one-sided, a little bit too much around, well, the labor market isn't really a source of inflationary pressure, and we're totally fine with a soft landing. We're totally fine with a stronger than expected labor market, with stronger than expected activity. I think, perhaps he's given up a little bit too much optionality without any clear need last week. So I think it's more regaining that optionality. But one thing is clear, man, is that when we look at that, this is not signaling an end to the rate cutting cycle. So for credit, for emerging markets, for high beta effects, for equities in particular, and for equity valuations in particular, the real game changer would be if basically the Fed and Powell said, you know what, we've cut 75 pips, this is it. Growth is way too strong. We're worried about inflation. We're worried about core, about underlying inflation. This is it. This is not a pause. This is the end to the rate cutting cycle. That would be the game changer for risk assets. And that's nowhere near. We're nowhere near that. So that actually means, yeah, we might get those wobbles like we've seen yesterday and today in the futures, but those are actually your buying opportunities. Those are your buying opportunities where people, I think, freak out a little bit too much on the downside.
Well, you're stoic, and if nothing, you've been absolutely consistent in terms of your pro-risk stance. You look at momentum and you look at positioning, and the two things are conflicted for me.
Yeah, I think, however, funnily enough, when we look at positioning, at least on our measures, when we look at shorter-term positioning indicators, for example, equity betas of multi-asset funds, they're actually still not stretched. Funnily enough, they're still closer to sending a buy signal. And our overall signals, both from systematic and from discretionary investors, from options-based positioning, ETF-based positioning, real money positioning as well, what you've seen in the last couple of weeks was, despite the S&P going to all-time highs, despite global equity markets going to all-time highs, things like high-yield credit spreads approaching the all-time tights, despite all that, we've always been consistently closer to a buying signal, actually. Right? We've been closer to a buying signal rather than a sell signal. Right now, that's still pretty much in balance. We're still seeing pretty neutral sentiment. So that still doesn't give us a particularly great warning signal that, people are way, way, way too exuberant after the election result from last week.
Okay, and don't forget, there's now $7 trillion in money market funds, and one day, somebody will switch the gusher on, and those funds will come. Let's hope it's for all assets. I don't have any favourites. You talk about uncertainties behind us, and so it's re-risk again, it's increase your equities, your high yield, your credit. But Max, we're just about to launch into perhaps the biggest uncertainty territory of all, which is the size and the scale of tariffs, tax, and indeed deportations. Is the height of uncertainty not to come and not behind us?
No, look, I think two things on that. I think people confuse policy with politics a little bit at the moment. When we look at the policy setup is still one where we should be expecting more fiscal stimulus, where we should be expecting deregulation across various sectors in the US, where we should be expecting more rate cuts to come, where perhaps, for example, also in 2025, perhaps even in the first half of next year, quantitative tightening might be ending, it might be ending sooner than some of us think, because there are some signs, at least, of some funding concerns popping up, particularly in the US. And all of that policy setup, which is ultimately what drives risk assets, which is what drives financial markets, that continues to be really supportive. So that's the one factor. The second factor is, because of these worries, because of these concerns around politics, ironically, what it does is it keeps sentiment in check. It prevents sentiment and positioning from becoming too exuberant. Because we've all got all these worries, we're all running, across the street. We're all running these scenario analyses. What is it going to mean for inflation? What does it mean for Europe? What does it mean for China? What does it mean for growth in the US? All these kinds of scenarios. But what it really does is it keeps preventing investors from going full on and really max long risk. And that actually, from a sentiment positioning perspective, is a positive factor.
Listen, those models are running hard and hot. What's the most extreme kind of model that you and the team have extrapolated? What's your sort of worst nightmare for 2025 on some of that?
Yeah, look, I think when we go into 2025, the fact is that we don't actually know even what the sequencing is around it.
Yeah.
So I think what we've got to figure out first is, for example, what is coming in terms of sequencing. We could also argue that there's, perhaps something coming along the energy policy.
In terms of sequencing, then, is it that if he doubles down, if Trump Mark II doubles down on tax first of all, rather than all a tariff war, that would be pro-risk rather than another headwind?
Yeah, I think so. When we look, for example, at the whole concern around tariffs, perhaps it's a little bit overblown. We don't also know whether that's, number one, whether that's going to come first. Number two, how large it's going to be. There's a lot of uncertainty attached around that. What we do know is, again, is the policy setup. What we have much more certainty around is the policy setup. We know that, the Fed is most likely going to continue cutting rates.
Yep.
Whether they'll skip December, whether they'll skip January. I mean, who cares at the end of the day? If you're a rates guy and you received or paid December and January, fine, that's your trade. But if you're long equities, if you're long credit, that's not really the stuff you care about. The policy setup is really what I think matters. At the end of the day, when we compare it, for example, to 2019, remember 2019, we also had global trade tensions. But what happened? The Nasdaq went up almost 40%. We had the S&P going up 30%. Why? Because real yields went down from 120 basis points at the end of 2018, and they went all the way down to negative. So if you had followed and focused too much on the politics side rather than the policy side, you would have made a massive mistake. So I would argue the policy setup is the much more important one going into 2025.
And as you very, very clearly have said here, we're not setting up to end rate cutting thus far. That is not the rhetoric that you take away from the Powell speech yesterday. Max, great as always, great context. I remain forever committed to the upside. HSBC's Max Kettner there, full bull. Trending stories on your Bloomberg terminal. This is what we got for you Friday morning. Hedge funds have reduced their exposure to the tech giants, the likes of Apple and Amazon in the third quarter. Now, that is based on the analysis of the latest 13F filings. Amazon holdings fell by $11 billion and Apple decreased by 25%. Tech still accounted for the biggest weighting for the hedge fund portfolios at 21%. Meta says it intends to appeal court rulings that allow states and schools to sue social media apps over their contribution to the mental health crisis amongst the youth. Lawsuits were also filed against TikTok, Snap, and Google. Applied Materials gave a disappointing revenue forecast, signaling semiconductor customers may be holding off on orders. Now, despite the CEO remains confident that AI and new types of chips will keep the industry growing. Coming up on the show, Trump's cabinet continues to take shape. One notable absentee, Jamie Dimon. More on the top picks. And later this hour, we speak to Adam Posen on the economic impact of the President-elect Trump's immigration policies. Context matters on Bloomberg. It's Bloomberg Brief. I'm Menaskrani here in New York. Donald Trump's cabinet continues to take shape. One person who won't be joining it, though, is the JP Morgan CEO, Jamie Dimon. Trump shared a social media note that he respects Dimon, but that he wouldn't be invited to his next administration. Now, here's what Dimon said in reaction. He spoke to Bloomberg from the APEC CEO Summit.
First of all, I wish the president well, and thank you. It's a very nice note. But I just want to tell the president also, I haven't had a boss for 25 years. I'm not about ready to start.
Joining me now on Trump's cabinet picks, it is Bill Ferries. Bill, just very, very quickly, we still don't know who will be Treasury Secretary. Briefly, it looks as if it's narrowing down to Bessent and Bessent and Howard Lutnick.
Yeah, Donald Trump just several hours ago teased that he would have a big announcement coming on Friday in the U.S. We don't know if that's Treasury or something else, but Treasury is the big one outstanding. And it does seem that there's still a battle going on behind the scenes over whether it's Lutnick, Scott Bessent, or someone possibly like Lighthizer as well. We just don't know yet.
Yeah, I think the narrative and the betting seems to be around Bessent and that Lighthizer may come back in trade. One name that has been announced is RFK Jr. for Health Secretary. Now, that's the latest pick. It's certainly attracting attention, not least because we know his very strong and ardent views on vaccines. Just look at some of those vaccine stocks. They really tanked yesterday. But what do we know about his public health record?
Well, he did start off as an environmental lawyer decades ago and earned a very positive reputation for that. During the campaign, Donald Trump said, after he formed this alliance with RFK Jr., he said he would let Kennedy go wild. That was his quote on the healthcare industry. Kennedy has been very skeptical of a lot of vaccines. He called the COVID-19 vaccine a crime against humanity. He would be very hard on the pharmaceutical companies, and I think that's why you see that market reaction today. It would certainly be, if it goes to a confirmation hearing, a very complicated confirmation hearing, just given his focus on his previous statements on healthcare policy in America.
Let's just frame this confirmation, the process to confirmation. If it is the Senate that goes through the processing of that, you're hearing from the recently appointed Thune, the new leader of the Senate. He's saying all options are on the table. And then you hear from John Cornyn, of course, who didn't get the job as Senate leader, saying, we need access to all the relevant information by whatever means necessary. Of course, he's referring to Gates and those investigations into Gates.
Right. Matt Gaetz, Trump's pick to be Attorney General overseeing basically the justice system. He has been the subject of a federal investigation that was dropped about a year ago, but the House Ethics Committee has been looking at charges that basically arose when he was accused of having paid for sex with a minor, having done some illegal drugs and things like that. The House Ethics Committee was due to release their report today, but his resignation, Gates' resignation from Congress, put that off. The Senate wants to get their hands on that report. That will be something that will certainly come out, at least behind the scenes, before any confirmation hearing takes place. Matt Gaetz, the reality is he's not very popular among Republicans in the House or the Senate. There's a lot of people who are gunning for him, and I think he's probably the most difficult nominee at this point to see getting even to a confirmation process, let alone through it.
OK. Well, let's see what the big announcement is today. Bill Ferry's there on the very latest political appointments in the Trump cabinet. Coming up, a look at what else is making headlines around the world, including Buffett buying a slice of Domino's. More on the story in just a moment, right here on Bloomberg. Bloomberg Brief. I'm Manaskrani right here in New York. Front pages look a little bit like this, making headlines around the world. We kick off with the Journal. Berkshire Hathaway purchased small slice of Domino's Pizza. The 13F filings reveal that Warren Buffett's conglomerate took a position in the pizza chain. Berkshire also bought stock in Pool and has cut its position in Ulta Beauty. Next up, New York Times. Elon Musk met with Iran's UN ambassador. Iranian officials say this. Now, it's reported that they discussed ways to defuse the tensions between the US and Iran. This was on Monday. The meeting lasted over an hour and was held at a secret location. That's according to the Times. Bloomberg leads with the China stimulus boosting domestic consumption as the Trump tariffs loom. China's economy showed signs of balance in the fourth quarter, with consumption growth nearly catching up with factory output. What better man to talk to about this than Tom McKenzie. Tom, good to see you this morning. So it looks like there's a small recalibration by the consumer, and this is everything that markets wanted to see.
Look, Manus, you're absolutely right to focus in on the consumer, because that's the component of the China story that analyst investors have been looking for a turnaround, linked, of course, to the real estate and property prices, given of how much household wealth is invested in the property sector. We know the travails there, but you're absolutely right that retail sales is the standout data point of this otherwise mixed picture on the data front from China. So a massive pickup, or at least a significant pickup in retail sales, above all the estimates that had come through from the economists, suggesting that maybe China's consumer is feeling a little bit more optimistic. But I use the word mixed because the data on other fronts was still a little challenged. If you look at things like industrial production, that actually came in a little softer. And then house prices, month on month, continue to fall in terms of the house prices, but at less severe state, less extent, smaller drop than had been expected, certainly than previous months, suggesting that maybe the real estate sector is starting at least to have a floor put under it. Bloomberg Economics saying, look, we're not seeing a turnaround yet in this Chinese economy, but maybe the bottom is now in place.
We're tracking the 13F filings, the smart money, David Tepper, and Michael Burry. It's interesting, Tepper, of course, was buy everything. That was September. Is he still as bullish?
Yeah, it was a straight, clean call, wasn't it? Buy everything China in September. You saw the CSI 300 adding about 35% towards the end of September, early October, and now it's kind of flatlined and is trading in a range, the CSI 300. And what you're getting is a more nuanced picture from these 13F filings from Tepper and others. So Tepper actually trimmed his exposure to Alibaba and one of the ETFs that tracks China's large cap shares. Overall, his holdings of Chinese equities actually increased from 26% to 38%. But again, he did trim some of the holdings in Baba and some of the other large cap stocks within that ETF. Michael Burry, interestingly, increased his exposure to Alibaba. Didn't trim, increased, but added some options as well to hedge that risk. He did the same thing with JD.com and Baidu as well. He increased his holdings in Alibaba, by the way, by about 30%. But again, he's adding these options. So it seems like they're taking a bit more of a nuanced approach, hedging some of those risks, because, of course, one of the key risks going forward isn't just what happens with the economy and the data that comes through and the stimulus on the monetary policy front, the fiscal front, but also, of course, what the incoming Trump administration does in terms of further restrictions on that economy and on trade flows to China, and how that will ripple across the world's second largest economy.
And I think that one of the big issues in that, Tom, is going to be what happens to the currency and whether the tariffs have the same. Just have a look at the IIF article this morning. It's great. It's the scale of the reaction function of the drop in the yuan this time around relative to the tariffs the last time around. They don't think it's going to be just as aggressive, but I don't think anybody really has the complete answer to that, do they, Tom, just yet? Tom McKenzie, Bloomberg Daybreak Europe anchor, joining me this morning. Coming up, a conversation you don't want to miss. Adam Posen at the Peterson Institute on the economic impact of the President-elect Trump's immigration policies. Context matters on Bloomberg. From our global headquarters in New York, you're welcome to Bloomberg Brief. I'm Manish Cranny. Let's set your agenda. Signaling a pause, Fed Chair Powell says the economy is strong and sees no reason to hurry rate cuts as his colleagues remain cautious. I haven't had a boss in 25 years. A clear response from Jamie Dimon on President-elect Trump's ruling out the JP Morgan CEO for his second administration as Treasury Secretary. And a controversial pick. Robert F. Kennedy Jr. is picked as Health Secretary, and John Thune says all options are on the table to get Trump's nominees cleared. Good morning. Ground zero for reaction is the bond market. We will hear, of course, from Collins, Goolsbee and Barkin later today. But the market, in the very first instance, repriced on this one line from Jay Powell, the chair. I put it down as the art of the pause. Max Kettner disagrees with me. He doesn't think the Fed is going to pause. The one line is the economy is not signaling a need for the Fed to hurry rate cuts. I put it down as recalibrating the narrative from the chair. Roll it over, have a look at the stock market. It struggled a little bit with this pop in yields yesterday. You need to ask yourself this. HSBC, cross-asset Max Kettner, is still unashamedly bullish on this. He does not see positioning as stretched. He sees policy being more important than politics. And the policy is still dovish, it's still stimulatory, and to that extent, yes, maybe politics will restrain some of our exuberance, but policy is the alpha in the room, and for him, policy remains something that you want to be long of risk. 13 F filings, big is still beautiful. Tech is in there at 21%, holding on the 13 F filings, and the money flowed into U.S. stocks up to November the 13th. $55.8 billion flowed in. We give a little bit back this morning. NASDAQ, you've got the likes of Tesla and Rivian really under pressure yesterday. That was more as a result of the EV credits, the discussion around the possibility that the Trump team planned to kill the EV credits. We'll keep an eye on those EV makers. I spoke to Adam Posen, it was June, and we talked about the economic impact of President-elect Trump's immigration policies.
What this would mean for the economy is a manufacturing-centered recession. And inflation would go up, so it would actually be stagflation, but the inflationary effects would then be outweighed by the recession.
Joining me now, it is Adam Posen, President of the Peterson Institute for International Economics. Adam, welcome back to Bloomberg TV. The political dial has moved on since you and I last spoke about deportation, immigration, tax and tariffs. I want to drill into the immigration side, the supply side of this economy, Adam, because the risk is this, that it can be a much bigger deportation perhaps than was originally estimated. And I want to get a sense from you how quickly this deportation process will be undertaken. Good morning.
Good morning, Manus. Thank you for having me back. And most importantly, thank you for bringing top of mind again the issue of the economic impact of the Trump administration migration policies. I think that is not getting enough attention, and I was glad you and I were able to draw an initial attention to it some months ago. The point is, as we at Peterson and I have been forecasting, the migration issue is not quite like the tariffs issue or some other issues where the Trump administration can say, oh, this is just a negotiating stance. And the reason for that is twofold. First, there's so much domestic political demand, which is part of why he got elected, to take action. But second, there isn't like a government that you're negotiating with where the deal gets done. The whole point is to scare employers of undocumented migrants and to deter migrants from coming to the U.S. And so what they are likely to do, as we've discussed, is 30, 40, 50,000 migrants, ostensibly with criminal records, although some of those crimes are misdemeanors, and who the hell knows what they're going to pick up, and marching them across the border into Mexico on TV. And then what Stephen Miller's planning is building up private prisons and internment camps in the Southwest. And this is all meant, arguably, rationally, to signal to people, don't hire these migrants, you're going to lose them, migrants don't come. The difference is that they can feasibly do that, and then they scare people. But then they have to keep moving forward to make sure that it's credible they're really going to do this. Doesn't mean 1 million people necessarily, but it could mean easily a few 100,000, and that's very feasible.
Okay.
Finally, on the practical side, sorry. The key point is that I overlooked something when we last spoke, which is the impact on the housing supply. You're right to call this a supply side shock, and it will be felt there as well as manufacturing.
I'm interested because when we last spoke, the bandwidth, Adam, from the Institute was 1.5 to 7.5 at extremis. What is the real risk here? You're now my sense is you're recalibrating the size and scale.
Not that much. What we did was we did the simulation at 1.5 to 7.5 million deportees, because that was what was in the platform and statements that various Trump, either the president-elect or his surrogates, had said. So we were just taking them literally. We're recalibrating in two senses, or I'm recalibrating, I should say, in two senses. The first is we talked about this, but we couldn't study it, which is how do you estimate what the fear effect is if you deport tens of thousands or a couple 100,000 rather than 1 million? It's not going to be only a few percent of deporting a few million, but it's obviously not going to be the same as deporting a few million. So that's one point. Adam, the other point, as I mentioned, is the housing market.
Okay, we've got a lot to pack in. Sorry to hurry you along.
No, sorry to get so long.
Not at all, not at all. It's good to get context, and that's the important thing here. Briefly, is still base case stagflation rather than an inflation bump?
Base case for the migration effects is stagflation. Base case for tariffs, for energy deregulation, for fiscal indiscipline, including unfunded tax cuts, all of those are inflation without necessarily stagflation. In fact, as my colleague Olivier Blanchard has argued, and I largely agree, there is room for there to be a boom-bust cycle under Trump if he gets to pursue particularly the fiscal policies. But the migration is the different one, and that's where I disagree a little bit with Olivier and some others. I think that's where there's a risk that if they overdo it in economic terms, you get stagflation as well instead of a boom-bust.
Adam, let's go. I'm calling it the art of the pause. I've already had HSBC knock me down. The economy is not signaling a need for the Fed to hurry rate cuts. Chair Powell, is that regrasping two-way optionality for the Federal Reserve, or is that, in your mind, recalibrating towards a pause?
I think he thinks it's the latter, and he's failing at the former. Meaning, as you and I, again, started talking about months ago, I've been calling that the Fed was setting up too many expectations for ongoing rate cuts, irrespective of the election, because they overestimated how tight they were and underestimated the strength of the economy, and then said they should have been preparing people because both Harris and Trump were going to do fiscal excess. So now he's stuck. He browbeat people into doing a 50-point basis cut when there was no need. The economics are pushing against continued cuts into 2025. I think your apt description is what he's trying to pull off, but it doesn't really matter whether the cut's in December or January. They're going to pause cutting some point early in 2025, and that's going to be just vindicating the way the long end moved in the markets.
Okay, so that's the interpretation. I do want to get your opinion on one thing. It's a brilliant phrase. A lot of people have sent me messages on the hegemony and the dollar's exorbitant privilege. Given the landscape of policy that we don't know the details on yet, but we think it's going to be a bumpy ride, do you see capital outflow from the US economy as opposed to massive inflow? Because that impacts the exorbitant privilege of dollar.
Absolutely. I see massive inflow because even if when it's the US causing geopolitical instability, let alone trying to force people to invest and pay the government, capital flows into the US. I see our inflation and our tariffs pushing up the currency and my interest rate policy also obviously dollar strong. I see Europe and China both being weak in cyclical terms and structural terms. So the good news from the Trump sweep, the Republican sweep, is he's more likely to behave in a constitutional manner. And that would have been unconstitutional fiscal attempts against, say, if there had been a Democratic majority House, that would have undermined the dollar. But if he's staying within his majorities and legal barriers, I expect the dollar to go very strong for a couple of years.
Adam, always great to get your perspective. Thank you for joining me on Bloomberg Brief. That's Adam Posen of the Peterson Institute for International Economics right here on Bloomberg. Good morning from New York. It is your Bloomberg Brief on a Friday morning. I'm Manishkrani here in New York. Donald Trump's cabinet continues to fill up. One person who won't be joining it, though, is JP Morgan CEO Jamie Dimon. Trump shared on social media that he respects Dimon and that he wouldn't be joining his administration. And here's what Dimon said in reaction. He spoke to Bloomberg at the APEC CEO Summit.
First of all, I wish the president well, and thank you. That's a very nice note. But I just want to tell the president also, I haven't had a boss for 25 years. And I'm not about ready to start.
Joining me now for more on the Trump cabinet picks is our Bloomberg senior editor, Mike Shepard in Washington. Mike, there you go. Very, very graceful. I haven't had a boss in 25 years from Jamie Dimon, and I'm not about to start now. Of course, we're still waiting to hear who the Treasury Secretary will be. Trump, he took care to mention that he won't be inviting Jamie, and it was very, very graceful and elegant response from the two of them. What are we down to?
Well, we are down to now 3 based on our latest reporting, but keep in mind there are always wild cards, and we have seen these crop up through the selection process, which is unfolding so rapidly right now from Trump's Mar-a-Lago resort in Florida. So the 3 odds-on favorites are Scott Bessent of Key Group, a hedge fund manager. We're also looking at former U.S. Trade Representative Robert Lighthizer, who had spearheaded the administration's tariffs and trade policy during Trump's first term, and then Howard Lutnick, who's the CEO of Cantor Fitzgerald, and he is somebody who was helping to oversee the Trump transition and has a bit of a window into everything that Trump is thinking about as he pulls his team together.
Well, he maybe is the one in the room at the moment, as a number of people have said to me in terms of the narrative he's there bringing in the staff. RFK Jr., excuse me, RFK Jr., Health Secretary, is the latest pick to attract some attention. Now, of course, conspiracy theories, we know that he's not a fan of vaccines. A lot of the vaccine stocks came under pressure yesterday. Trump says he will restore the gold standard in scientific research and beacons of transparency. So what exactly are his views on health?
Well, in a word, they're unorthodox, and that is drawing concern from across the healthcare and medical research establishment. We talked to a number of people as RFK's presidential campaign. Remember, he ran as an independent, came together where a lot of these views came out. It's not just his skepticism on vaccines. He has also called for removing fluoride from drinking water systems around the country, and that defies more than 80 years of consensus. emphasis on oral hygiene. So things like that are causing a lot of concern, including on Capitol Hill, where lawmakers in the U.S. Senate will have some say over whether he should be confirmed as Secretary of Health and Human Services. And remember, Manus, this is a big job.
Yeah.
He oversees more than 100 public health care programs and research initiatives with a lot of influence. You mentioned the stocks, the vaccine makers' stocks. Mm-hmm. He would have enormous influence over the pharmaceutical industry and other businesses as well in this role.
Look, we've got RFK and Gates up for approval, along with others. My sense is this, that from the Senate, you've got a newly appointed Senate leader. All options are on the table. But it sounds as if this Senate really does want to have its voice. If you look on Matt Gaetz, some of the people in the Senate there are talking about, John Cornyn. I know he was up for the job, but he's talking about making a subpoena for the information on Gates and the investigations.
Well, that's right, Manus. They are looking for regular order on this. The president-elect has really made clear he would like his nominees to get through as quickly as possible, even if it means the Senate takes some shortcuts. And while leaders there may be interested in cutting a corner on one or two of the nominations to help Trump out, on RFK Jr. and on Matt Gaetz, who is Trump's pick to be Attorney General, that may be a bridge too far. Matt Gaetz in particular is someone who will demand a lot of scrutiny. He has been facing a recently closed House inquiry into allegations of sexual misconduct, and he also happens to be one of the least popular members in the U.S. House right now. Even his own colleagues have complained publicly about his behavior on the House floor, and there's also a lot of resentment over the role he played in ousting former Representative Kevin McCarthy as House Speaker. So a lot of that tea will want to be spilled as senators consider whether to advance him and approve him as Trump's Attorney General.
Okay, well, let's see whether there is a big announcement today, Shep, and whether it is trade or Treasury Secretary. That's what the markets really are focused on. Mike Shepard there in Washington. Just a quick correction for you. A little bit earlier, we said that on the hedge fund 13F filings, they had been pulling back on their tech holdings. Well, Amazon holdings fell by $11 billion. It was Berkshire Hathaway that cut their Apple position by 25%, not the hedge funds more broadly. That's it. We'll have a little bit more for your trading day ahead. We're waiting for more Fed speak to come throughout the day. Collins, Goolsbee and Barkin. This is Bloomberg.
This is Bloomberg. I'm Oliver Crook here in Brussels. We have just got the newest sort of edition of the European growth and CPI figures brought to us by Paolo Gentiloni, who is the EU Commissioner for the Economy, and he joins us here on set now. Mr. Gentiloni, thank you so much for your time today. So you've put out these forecasts. We're coming back to growth next year. Inflation is coming down to 2%. It seems to me that these are some of the most fragile and vulnerable forecasts that we've ever had because we know something is coming from the Trump administration. What are you expecting?
Well, from one side, we are satisfied of the fact that after a 2023, which was stagnation, zero growth, we have now a moderate growth, of course, with different situation in different European countries. We still have the larger European economy, which is Germany, with negative activity. But overall, the famous soft landing is, I think, there. Same time, we'll have to face the new situation with this historical victory of President Trump. I don't think that now we can speculate on the decision that will be taken.
But he has said 10% or 20% tariffs. When you hear those numbers, what kind of impact do you imagine on the European economy?
I think that we will, of course, address the measures if and when they will be taken. Overall, our point is we are referring to a trade flow of 1.4, 1.5 trillion, which is the most important economic flow in the world. And it is a flow among partners, allied. So to compromise this, I think, is something that nobody has in mind, because if you compromise this, the impact will be, of course, in the European economy, but also in the American economy.
Do you think that this could endanger the sort of CPI hitting 2% next year, hitting that target? Do you think that that puts it at risk, these tariffs?
Well, if these tariffs will be decided, they could have an inflationary impact, in particular in the U.S.
Do you think for the new commission, we've been hearing from Mario Draghi, he's talked about the slow agony of decline of Europe if it doesn't get its act together. Macron has talked about the death of Europe. In your speech just now, you said part of the answer must be new common European financing instruments for common use. What new instruments are you referring to?
Well, we had an experience, unprecedented, 800 billion euros of common funding with Euro bonds. I think the financial markets prove that this is doable, and I think that this could be repeated. Where and how? I think the first attempt could be on common defense. Mm-hmm. And in my view, the fact that President Trump was elected with such a strong majority can also prove to be a wake-up call for the Europeans, especially on defense. So common funding
do you think there's the political space for common funding on defense?
I think there is. And what in our Brussels language we call the frugal countries, yes, those that are more reluctant for common funding, are less reluctant on common funding for common defense. And so I think there is a way.
And I'd like to understand also what part the trade war potentially between Europe and China. We have obviously this dispute over electric vehicles. We have seen some retaliatory measures. What part does that take into your projections?
Well, here I think we should consider two things. First, that the European Union left his traditional ingenuity in the trade relation with China in the last 2 or 3 years. This was not the situation 10 years ago. We were hoping and expecting an unlimited growth in trade with China without many conditions. Now we are putting conditions. If there is overproduction and subsidies, we are reacting. But at the same time, don't forget the fact that for the European Union to keep open the global trade is a vital interest. Yeah. And so we will not close the doors to a protectionist way.
And very quickly, is it easy for you, if, say, Trump comes in, he says 10% tariffs across the board, is it easy for you to calculate what impact that has, or are there a lot of unknowns in those models?
Well, there are a lot of unknowns. What is clear to me is that the impact would be for both economies, both Europe and US. And this is a more reason, an additional reason to consider these things not as a given, but to start a conversation and cooperation. And this is what the European Commission will do with the new administration.
Well, Paolo Gentiloni, thank you so much for your time. The EU Commissioner for the Economy here in Brussels. Manus, with that, I'll hand it back to you in New York.
Oliver, great conversation there. The risk is, of course, to blow back tariffs here to the United States of America, and that has consequences for growth, for inflation, and as we heard from Adam Posen, the risks for stagflation 2025. That was Oliver Krug with the EU Commissioner, Paolo Gentiloni. I'm going to leave you with a snapshot of what's going on equities. The surveillance team will take you through the machinations of the markets. This is an equity market which has given back pretty much a third of its trough to peak rally since the election. We nip a little bit lower this morning. Electric vehicles will be in focus again. S&P 500 down by 0.6%. Good morning from New York.